Good evening, Ryan.
Good evening.
How are you?
I'm doing pretty good.
Okay, you want to make sure your slides are working okay?
Sure.
Okay,
And then looking through
looks good.
everything.
Okay.
Yeah, you actually the deck you sent me was actually pretty good. I did add, I think I added a slide about debt payoff strategies. But
Uh-huh,
for the most part, it was pretty good.
good. I put that together um, a while ago based on just some references that um, Curtis Scruggs had given me. Um, so I know it's pretty basic. But I think for a lot of our clients, it's probably all that they need.
Well, that and I think I kind of explained stuff better in the speaker notes too. It's like explaining a lot about the
Yeah,
slides. So
good. And I'm sure they'll have some questions for you. We only have 30, 31 or 32 people signed up when I looked at it this morning. But that's not surprising because there's probably not that many people who are looking for credit repair. But the ones who are interested are probably very interested.
yeah, especially with the interest rate environments right now, a lot of people aren't even looking at credit
Yeah,
in
absolutely.
general.
Yeah. So I'm going to do the slides first, and then I'll stop sharing and you can go ahead with yours.
Okay.
So let me see if I have the score slides. Yeah. Okay, I only have about 6 or 7 slides, and I'll go through them pretty quickly. So I'm hosting a webinar tomorrow as well. One of our simple steps. I think it's the financial plan tomorrow.
Gotcha.
No, I guess it's not. It's probably, I think I did the financial plan last Thursday. So I think it's the funding. Yeah. Dan Toll does that session. He works for the SBA. So, and he has contacts with a lot of the banks and stuff. So he really, I think he does a good job really reviewing all the possible options of funding. But it's so hard for startups to get funding.
Hmm.
I was talking with a client yesterday and, you know, she can't do a line of credit because she has no collateral. She has no money. So and I said, even if you got a loan, you still have to have probably 20% of what you need.
Yeah, if she just needs a line of credit, she might be able to find a bank that's willing to do like an SBA line of credit. Um, because even if you don't have like inadequate collateral is literally one of the main reasons why people go SBA or
Mm.
banks go SBA. It's just a matter of the bank even looking at it.
Well, a lot of times, if they have a relationship with a bank, um, they can sometimes work out um, a, a deal where if they, come up with so much money, the bank will help them. But so many of our clients, a lot of Black people don't trust banks and they
Mhm.
don't have bank accounts. So I have a friend who owns apartment buildings, and his residents will pay their rent by going and getting um, what what is it called? A bank check, um, because or they'll go to Western Union and get the money through that. I mean, they don't want to have bank accounts.
Yeah, I've seen that. I've seen that more and more often.
Hmm.
I think it's just a stigma or, something, I don't know, like, you know,
Well, I think,
generational kind of thing.
yeah, yeah, I'm sure you're right. So are you liking your new job?
Yeah, I'm liking it pretty well. I know it's, it's the same thing I was doing before, so nothing too crazy or,
Mhm.
too exciting yet, but
Well, hopefully it's an organization that you can grow with.
yeah, I'm hoping. They don't really do a whole lot of SBA underwriting right now, but I think they're looking to hopefully grow that side of their business, and I'll be a big part of that
That's good.
because I have the 6 years total SBA experience.
Yeah. Have you, on another topic, have you caught up with your clients
Yeah,
yet?
I think there's two that have not responded yet that I'm going to end up sending a ban by the end of the week, probably.
Okay, well,
Um,
but if, you know, if they don't respond after you've tried texting and phone calls and so forth, then you can send them a ban email, and then that would take care of it.
mhm.
If you go to our volunteer portal, it tells you exactly how to do a ban email, and I think there's even a chat GPT template.
Yeah, I've been
that-
using that for all the bans I've been sending.
okay, okay.
It's just unfortunate because I want to help people, but they got to help themselves too by answering me.
Exactly, exactly. I know it's very frustrating for a lot of mentors to have clients that don't respond. Um, but I think sometimes people think they have a great idea. They think, gee, I'm going to start this business, and they'll go online and they'll sign up for a mentor. And then I think, I don't really want to do that. So then they just don't respond instead of saying, I'm not going to pursue it at this time or something, which would be very nice if they would say that. But they just don't respond. And sometimes our emails do go into their spam folder. So that's one of
Mhm.
the reasons I make sure that I text people and that I try phoning, because I have had several instances where they found, when I've texted them, they've gone and found the email in their spam folder. So what I generally have been doing is, when I send that email, which we're required to send, I follow up almost immediately with a text.
Gotcha.
And that way they know that I sent them an email. And if they respond saying that they can't find it, I'll tell them to look in their spam folder. Um,
Well, the biggest thing for me was like Chris Ann said it was at the lowest amount of new assignments per week, but I've still got like five in the matter of 10 days. I'm like, what is going on?
yeah,
And it just put me behind like instantly.
actually, Curtis Scrubs, who's, one of our leadership people now, it has been terrible about following up with clients. He says, well, why should I bother if they're not that interested? They're not going to go anywhere anyway. So I'm not going to waste my time. And I say, well, you have to do it. So he's not happy about that, but it's a commitment that we have to do.
Mhm.
So I'm going to go ahead and start the webinar and let people in. We've got 3 people in the waiting room, so. Good evening to those of you who are just joining us. We're going to wait a couple minutes till everybody has a chance to log on, and then we'll get started. The session tonight is on credit repair, so I hope that's what you signed up for. Well, hi, Randy. It's nice to, this is a good webinar for you. Randy's one of my clients. They have a dog treat business and using gumball machines for dispensing. Oh, well,
Yeah.
you're helping to mentor her. So it's nice to see when you have clients that have innovative ideas.
For sure.
So. Okay, I'm just going to wait maybe 1 more minute. Okay, well, let's go ahead and get started. Again, welcome. This is our credit repair session. And first, I'd like to give you a little bit of information about SCORE. As we go forward, if you have questions or comments, feel free to use the chat or the Q&A for your questions. We will probably get to them at the end, but if you have something pressing during the presentation, put it in the chat or the Q&A because we will be monitoring it. You will get a copy of the slides and also a link to the recording, so you don't have to take notes. So let me tell you a little bit about SCORE. Our mission is to foster vibrant small business communities. We do this through mentoring and education. We hope that you, as a small business owner, get the support you need to be successful. As you probably are aware, small businesses drive the economy. If you notice in Cleveland in the last few years, the central city has been revitalized mainly through new small businesses, and you should be we should be thankful that you're willing to make the effort to start a small business. So SCORE is the largest network of free volunteer small business mentors in the nation. So no matter what stage your business is, we have a mentor that can help you. And if we in the Cleveland office don't have somebody in your industry, there are 10,000 mentors across the United States that we can contact to help us with mentoring you. So do feel that you can come, and if you let us know what your business is, we will try to match you up with a mentor that will have the same background and be able to assist you. This is the result of the 2023 year for our organization. We helped start over 30,000 new businesses, 120,000 non-owner jobs, and 150,000 actual jobs. So SCORE has been around since 1964, and we have been diligently working with many different entrepreneurs, and we're delighted that they come to us for help. We have about 10% veterans, over 50% of our entrepreneurs are women, and almost 50% are minorities. This is a snapshot of our website. If you go here, you can actually look at the profiles of our local mentors and choose a mentor if you want, or you can allow us to match you with somebody. Also, if you check here, you will find a list of all the upcoming live webinars, plus all the recorded webinars that we have, and they're close to 100 on our website. So if you can't get to a webinar, you will be able to go to our website and look up that webinar as a recording. So here's a link to our website and also a QR code. And I think that's my last slide. So I am going to stop sharing.
It looks like Penny was having some trouble with seeing the slides. Are you able to see them now, Penny? Well, not
Well,
now.
I just took them down, but
Okay.
I don't see other people having.
I also
think,
see Tracy has her hand raised. I'm not sure if she has a question, or he or she, I should say.
okay, I don't.
Oh, looks like they lowered their hand. So
Yeah, I don't see it. Okay. Well, let me introduce our speaker. Ryan Mincy is relatively new to SCORE. He's in the banking industry and very familiar with what we're talking about tonight with credit repair. So I hope that you will find it helpful. And I'm going to turn it over to Ryan and ask him to get started.
yeah, so as Anita mentioned, I have been in the banking industry for 10 years. So I specifically work in credit underwriting for a small business team. I know exactly what goes into getting a loan from a bank and how important credit can be. And I can say from personal experience, it's not something that you really think about until you need to think about it. And when you do, you maybe realize it's something you should have been paying a little bit more attention to. A little backstory about me: I grew up with a single mom. She worked two jobs. We were below the poverty line my entire childhood. She couldn't teach me something that she didn't know about, so I had no idea about credit and how important it was. I learned that firsthand when I went to a college I couldn't afford, and took a loan out that took me a decade to pay off. And the worst part is I didn't even get a degree from that college. I only went for 1 year. So I personally struggled on my own journey to repair my credit over that time. And what we're going to talk about today is we're going to go over some tips and tricks to give you some information on how to improve your credit score, both your business and personal credit score, so that you can be in the best position to be a successful entrepreneur. So credit repair is just like it sounds. It's fixing your bad credit. Usually, it's to the ultimate goal of something, such as buying a house, buying a car, or possibly getting a small business loan to start or expand your business. Many prospective and existing business owners don't realize that banks often rely on personal credit and personal guarantees in order to make a decision on whether or not to extend credit to somebody or a business. The main path to improving your credit is all about paying down and managing your debt. There are many different methods to do that, and we'll talk about them in a later slide in the presentation here. But the other important thing is also making sure your credit report has the correct information. You could be getting negatively impacted by debt that's not even yours, that's in collection, or you could be getting hit multiple times for the same debt on your credit report. Oftentimes debt is sold between different, collection agencies, and sometimes you might be having that same debt reported more than one time. So it's essential that you challenge and dispute those errors on your credit report. So first of all, what's the impact of having bad credit, and why do you need to improve it? First of all, your credit score isn't just a bunch of numbers. There's a lot of consequences to your credit score and can affect various aspects of your personal and financial life. As I mentioned earlier, I was there myself for a long time, and oftentimes people with bad credit often face challenges when applying for loans because lenders will view them as a higher risk, which means they might be denied outright for a loan, or they might struggle to find a institution willing to lend to them. They may have to look to like a high risk institution, which are lenders that often charge exorbitant fees or interest rates, making it even harder to escape that cycle of debt that you're in. If your credit's not good, securing a credit card could be difficult, if not almost impossible. Many traditional banks will deny, credit applications, forcing individuals to look at like a secured credit card, which is essentially a card that requires an upfront cash deposit. While these are actually a really good tool for building credit, which we'll touch on a little bit later, they're not ideal for somebody that is looking for some way to manage cash flow for their business. You might get approved for credit or loans that are at much higher interest rates than other people, leading to more expensive payments over time. That can really significantly impact long-term financial health, both for your business and personally. For example, a $200,000 loan, if you were to get that for your business with a 6% interest rate over 10 years, has around $66,450 in interest charges. That same loan at a 9% interest rate is $104,000 in interest. So that's almost $38,000 more in interest based on your credit score. Another unexpected area impacted by bad credit that many people don't think about is insurance premiums. Many insurers consider credit scores when determining rates for auto and home coverage, which can result in paying more for your coverage, especially important for businesses whenever you're looking for general liability coverage. And finally, if you're looking for work outside of your business, a surprising influence of credit can be found in employment opportunities. Certain employers check credit reports during the hiring process, particularly for positions that involve financial responsibility. A poor credit history can be detrimental to your job prospects. I experienced this myself working in the banking industry. They've pulled my credit every single time I've applied for a new job. Next, we're going to explore exactly what a credit score is and what its significance is. Credit scores are primarily determined by different algorithms and systems used by financial institutions. The most common one is FICO, which is the Fair Isaac. I don't remember the rest of it. FICO is what it's generally known by. And what that does is it assigns a numerical value representing your credit worthiness, which is kind of crucial for financial institutions when evaluating a loan application. It's just a really quick snapshot of what banks are looking for as to what kind of risk profile it is to lend to somebody. It's important to note that the Federal Trade Commission study revealed that 1 in 5 consumers actually have errors on their credit reports that are negatively impacting their credit score. To ensure the accuracy of your credit history, you can obtain free copies of your credit reports every 12 months from annualcreditreport.com. And regularly checking for errors can help you maintain a healthy credit score and better financial opportunities. I really think the 12 months is actually a little bit outdated. Yes, you can get one every 12 months from annualcreditreport.com, but you can also sign up for like Credit Karma. I think Experian has their own thing, and you can get like like a credit report, same day nowadays. So it's easier than ever to monitor your credit and look at how to improve it. So what goes into your credit score? There's different components that go into your credit score, and the kind of like contribute to the whole thing. The largest factor by far is your history of debt repayment, which accounts for a total of 35% of your credit score. So this includes on-time payments, any collections, bankruptcies, foreclosures, late payments also show up in there. And that just really emphasizes the importance of a strong payment history because that's the bulk of your credit score. Next, we have the ability to repay current debts and manage additional ones, which is approximately 30% of your credit score with a focus on your current balances. Additionally, credit age makes up 15%, indicating the duration of one's credit history. So how long have you had credit and how long have you been managing it? And we also consider the credit mix, which is what different types of credit do you have? Do you have revolving credit? Do you have installment loans? What kind of mixture of credit are you managing? So it's also important to have a variety of credit types. And then the last thing that affects your credit score is credit inquiries, which can make up to 10% of your credit score. And that can really impact your credit score whenever you have recent credit applications because they fall off within 2 years. So the more you rack up in a shorter period of time, the more it can damage your credit score. Understanding all of these different components is really important to manage your credit effectively. So next, let's discuss the key factors that can significantly impact your credit score that we talked about on the previous slide as well. First, late payments can negatively affect your score as payment history accounts for that substantial portion of your credit evaluation. Next is excessive credit utilization or using a large percentage of your available credit. The biggest part of that is credit cards. Credit cards is what we consider revolving credit because you can charge it, pay it down, charge it, pay it down. So it's important to keep that utilization of that revolving credit at 30% or below to achieve the best possible scenario for your credit. Anything higher than that could signal financial distress to a lender. Additionally, having a short credit history limits your score potential as it doesn't really give lenders enough data to assess your reliability of making payments. Also, relying on only one type of credit, such as credit cards, can prevent you from demonstrating your ability to manage new different types of credit. Credit cards usually you have like a minimum payment due, and that minimum payment awfully isn't very large compared to the overall balance of the card. So it's important for banks to see that you can also manage, a specific, maybe larger amount for a car every single month. Finally, too many credit applications within a short time frame can lower your credit score due to hard inquiries, as it may appear that you're trying to take on too much debt too quickly. Understanding all of these factors together can help you manage and improve your credit score. So next, let's discuss the process of repairing your credit. Legally, it's essential that your credit reports are 100% accurate, entirely fair, and fully substantiated, which means that if you spot errors, you have the legal right to address them. You can start by contacting the credit bureaus themselves to file a formal dispute, which requires you to provide a detailed explanation of the error along with supporting documentation. Keep in mind that each dispute must be filed separately, making that process potentially lengthy. Alternatively, you also have the option to hire a credit repair company, which will handle most of the work for you, but you'll still have to provide all the necessary documentation. And then you also have to pay them, which may not be in the realm of possibility for some people. So basically, the first key step in repairing your credit is ensuring your credit report is accurate and reflects your true financial history. So let's talk about how to consolidate credit card debt and how to pay off debt, which is a good portion of your credit score is that credit utilization, which is 30% of your credit score. So let's talk about some various strategies to consolidate credit card debt effectively first. First of all, partnering with a nonprofit credit counseling organization can provide valuable guidance and potential repayment plans for people, which is very much needed a lot of times because some people just don't even know how to begin making those repayments. An alternative is to apply for a personal loan, which typically offers lower interest rates compared to credit cards, but still may be fairly high. Balance transfer credit cards, if you do have the capability of getting one, can be a useful tool because you can shift debt from a card with a higher interest rate over to a card with a lower interest rate or possibly even zero with an introductory rate for some period of time. Additionally, you could seek assistance from friends or family to ease your financial burden, which is not, today I would say is not very common. Everybody's kind of struggling a little bit. For those with equity in their vehicles or home, options like a cash out refinance or home equity loan can provide necessary funds to kind of pay down some of your debt. And lastly, a retirement account loan may be available, but it is really important to weigh the long-term implications of getting a retirement account loan because that is your retirement. If you can't pay back that loan, or there are several different types of tax implications for taking out money of your 401k and then not paying it back as a loan. So it's just really important to weigh all those different implications carefully. Each option carries unique benefits and risks. So consider your individual financial situation before proceeding with any of them. Sometimes these options just don't work for you, or you want to pay down the debt instead. So let's talk about how to strategize how to pay off credit card debt, or any debt really. It can also be installment debt as well. So debt payoff strategies such as the avalanche and snowball methods differ primarily in their approach to prioritizing debts. The avalanche method focuses on paying off debts with the highest interest rates first, which saves money on interest over time. The problem is oftentimes the debt with the highest interest rate is also just a large amount of debt, so it takes longer to pay that off. It does save you money in interest, but some people get discouraged when they don't see any real progress happening. In contrast, the snowball method emphasizes paying off the smallest debts first to build momentum and motivation, even if it may incur you more interest overall over time. While the avalanche method is typically more cost-effective in the long run, the snowball method gives you a bit more psychological benefits by delivering quicker wins for you as you're paying down your debt. Both strategies emphasize consistent payments and require discipline, but the choice between them often depends on individual preferences for motivation versus, efficiency financially. And then lastly, if you do have debt in collections, something you can do to pay off that debt, you can actually send a letter to the creditors, or collection agency in this case, and you can actually request them to request to pay off or to settle the debt in order for them to delete the debt off your credit report. It's important that if you do this method or if you try to use this method, it is really important that you keep all documentation back and forth with the collection agency. Documentation. I know this firsthand because I did this about 10 years ago for a debt. And the collection agency tried to keep it on my credit report still, but I had all the email chains and everything else that allowed me to keep get that deleted off my credit report with the credit bureau. So now that we have some strategies to get our debt in line with our credit score, let's discuss effective strategies to improve your credit score beyond that. First, once you get your balances low, it's important to keep them low, ideally under 30% of your available credit. Next is to apply for new credit strategically. Consider different options like secured credit cards or loans or balance transfers with lower interest rates, but avoid applying if your score is already low. If your score is already low and you likely won't get approved for credit, all you're doing is hurting yourself more by adding another hard inquiry on your credit report. Additionally, keeping accounts open can help build your credit history positively. So make sure that you keep them open. Even if it's a zero balance, even if you're not using the card, it's important not to close the cards out because that's adding to your credit history. Lastly, it's really important to prioritize good security. So practice, good security practices by regularly updating your software security, your antivirus software, employing VPNs for safe online transactions, because more and more often we're seeing scams and security vulnerabilities and everything that are affecting people because they don't have good security on their computer. These steps will contribute not only to a better credit score, but also to your overall financial health. You won't have to deal with identity theft. There's just tons of upside to it and no downside. And then when it comes to maintaining good credit over time, the biggest, most important thing to have is a solid budget. I recommend personally the 50-20-30 rule, which is allocating 50% of your income to fixed expenses like your rent, utilities, maybe your car payment, 20% to debt repayment or savings, which is a lot for some people. I know 20% is a high number, but the more you can save, the less you have to rely on like credit cards and things like that in case of an emergency. And then 30% for your variable spending, which includes like your discretionary purchases and like eating out and things like that. It's also really important to pay your bills on time because, as we discussed, late payments can significantly impact your credit score. And then lastly, consider signing up for credit monitoring services, especially like Credit Karma is something I recommend. They don't use the same FICO score as actual financial institutions. So you do have to be wary that the credit score they show may not be exactly what would happen or exactly what a bank would see if they look up your credit, but it'll at least give you pretty decent credit monitoring services for free. Not only does credit monitoring identify potential identity theft incidents, but they also send you instant alerts if there's a hard inquiry on your report or if a new card or something is opened. So that helps keep you informed and proactive in protecting your credit health. And last, there are a lot of things to remember about credit repair. So it's crucial to keep a few key points in mind. First of all, remember that repairing your credit is not an instantaneous process. Negative items can linger on your credit report for up to 7 years, so patience is essential. Back to my own personal journey, I had about a 550 credit score, which is pretty bad. And I worked really hard on it. I repaired my credit over about 3 or 4 years. And then I was able to purchase my first car. And then a few years later, I bought my first house. So it is a gradual journey. Don't expect to see results overnight. And additionally, take the time to evaluate your spending and saving habits, especially your saving habits. Understanding these patterns can really help you make better financial decisions going forward, as to whether or not to use credit or to use savings or cash. And lastly, make sure you educate yourself on your rights as a consumer. Knowing what you're legally entitled to can empower you in your credit repair journey. So that's actually all the slides I had here, but let's open it up to some questions, I think. I see some in the chat. I see some chat already. It looks like which nonprofit credit counseling organizations would you suggest or recommend? I think, yeah, I think Anita already answered that one. I actually don't have a specific one I've worked with before. I kind of just did things on my own. But you can definitely Google and look for a nonprofit organization that should be fairly easy to find. But again, like she said, make sure you check the reviews, Better Business Bureau score, and make sure that they're not trying to charge you any fees, or at least not any large fees to do.
I think most of the nonprofits are very reasonable in their fees, but it's still worth checking the reviews, making sure that they have a good, Better Business Bureau score. Look at their website and see if there are any negative reviews. People, it's interesting, I think people, if they have a negative experience, tend to post it more readily than a positive experience.
And then I think also in that slide there is a link specifically on that slide for each of those different bullet points. So when you get a copy of the slides, make sure you just go in there and click on it and see what it brings up for you.
That's true. Those are all live links. So, and you should get a copy of the slides within the next day or so. So, any other questions? I guess not. Everybody's anxious to get home and watch television. Must be something interesting tonight. So, okay, well, Ryan, I think this has been very helpful. I appreciate your taking the time to do this presentation. I hope everybody who's attended will find it useful. If you have any follow-up questions, you can certainly contact us. But if you don't have a mentor, I would recommend highly go to our website and sign up for a mentor. So people who have small businesses do better when they have a mentor, and they tend to survive longer as a business if they have a mentor. So I'm pushing mentoring. So enjoy the rest of your evening, and thank you again, Ryan.
No problem.
We'll
Thank
see
you
you
everybody for
again.
attending.